I want to get back to the markets after what has been such a remarkable, wild week for stocks. NASDAQ gaining 93 points yesterday, breaking a three-day losing streak, but it's still on track for its worst weekly performance since February. Joining us right now is Sylvia Jablonski, Chief Investment Officer and co-founder of Defiance ETFs. Sylvia, on this Friday morning, try to make sense of what we just saw, what just happened, but maybe more importantly, what happens next.
Yeah, good morning, Andrew. I think it's really encouraging to see a lot of the broad-based indices up this morning. I think what happened yesterday was that investors had a little bit of a reality check. So, producer prices came in a little bit high, but the jobless numbers looked good. And if we go back and just sort of think about all of this, not a whole lot has fundamentally changed. We haven't seen a full economic reopen yet. So there's positive news that should outweigh the fears of things like inflation coming our way. The 10-year stayed fairly steady. I mean, it's at the 1.6 plus level, but it's kind of hanging in there. And I think that, a lot of investors have cash on the side, and the market and equity exposure is a better place to be than having money sitting in your mattress, even if inflation is coming. So I think that, fundamentally, there are a lot of opportunities in the market right now. They're broad-based, they're spread out across sectors. And yesterday was really a good opportunity to come back in. So I think it's partially, reconciling inflation fears, money in the pockets, buying on the dips, and hopefully, economic reopen outweighs the fears of the future.
You have said the word inflation now 3 times in the past 60 seconds. So what do you think is about to really happen?
Well, I think it's an obsession. It's this week's obsession of the market, right? So, I like to listen to the Fed. The idea of don't fight the Fed resonates with me. Jay Powell is saying that, he thinks that just the base case scenario of the comparison period of 2020 versus, this last month's inflation reading tells us that there could be an additional 1% baked in there, right? We're comparing this to sort of the red hot period of everything being shut down. So of course, commodity prices got a little bit hot, lodging got a little bit hot, cars, food, things like that increased in value. I think we'll have to see if it's actually transient. And to your point, it's on the mind of investors and it keeps coming up. I hear it all day, but if we kind of just focus on, diversified portfolios and buying opportunities, it can be put to the background for a little while.
So what were you buying yesterday on the quote unquote dip, if we're going to call it that?
Yeah, I love the general 5G story. The idea that we're going towards a digitalized shared economy. So things like NXPI Semiconductors, which has been up over 40% this year. A company like Nokia that's going to refocus on network equipment and infrastructure. Biden has this huge plan to connect rural and urban America, and I think that that's the way of the future, and it's a good time to get into those names. I also like the classic, the FANG stocks that have been beaten up, the Apples, the Amazons. I think that they're going to continue to do well with earnings, and I think that regardless of sort of the small bumps in the 10-year and in the near term and whatnot, those are great quality companies with a lot of cash on their balance sheets that pay dividends, that invest in the future, and I think innovation and technology is the way to go. Finally, airlines have just been beat up. Cruise lines have been beat up.
Can we just go back to the FANGs, though? Because, everybody is down on the FANGs. You're the first positive person people are positive broadly about FANGs, but there's been so much rotation out, or at least that's the view that there will continue to be. You don't think that's the case?
I don't think that's the case. I think, in my mind, seeing names like Apple and Amazon, 10, 15% off of all-time highs, below their 200-day moving averages, those to me are buying opportunities. I think that these companies touch so many different parts of businesses, whether it's, retail customer subscriptions, the iPhone super cycle, again, talking about 5G, new situations where people will be adaptable and flexible, buying iPads, computers, Amazon. The world has gone towards e-commerce. It's just a fact. I don't think it matters whether or not, COVID spikes or goes away completely. People are going to keep using Amazon services, cloud, Internet of Things. So I just think that they're great long-term companies. And yeah, you're not going to get, we have this tick where we want 3-day returns now, 10% moves in these stocks. And I think those days are perhaps gone in the near term for some of those FANG names. But I do think that they're long-term investment opportunities at these prices.
Shepard Smith here. Thanks for watching CNBC on YouTube.